All right, here we go. First trading session of December. Last month of the year, we had ISM that came out. That was pretty bearish. I'll cover that in a moment. But we also had some news that snuck up on us, and it was Commerce Secretary Ross saying, yeah, we'll introduce some higher tariffs if we don't have a trade deal. And the market went down. But right before that, we had a bearish pattern and a head fake that I told people, hey, you got to be careful being long. You've cleared the downside right here on the lower right of my screen share to go lower, because in this consolidation box, right, you had a sneak out the top, which does what? It gets momentum longs excited, and it also gets shorts to puke. Less shorts, less buyers below. You get through the middle of this box, and you really start to generally in this pattern start to move the market lower. And it does. It gets through these three consolidation lows, and they crack it. Now, it had the help from that negative Ross comment, but when you have a negative pattern, bearish pattern called a head fake setting up with that, it either keeps you off the wrong side or puts you on the right side to line up with news that comes out. There was no reason to be long in here before negative news, and that's why I try to get people from having the excuse, well, I was long and this negative news came out. Well, really, through this pattern, you should have been careful about being long amid all this weakness. Also, we had other things that had happened today that made us weak. Before that Ross comment, we had ISM, which is the second biggest number of the month that comes out the first business day of the month, which is today at 9 Central. ISM, National Look at Manufacturing. It's been bearish the last few months. So, you know, the market's a little bit on eggshells when it gets weak manufacturing back to back to back and everything. So we get it again. They were expected 49.2. It came in 48.1. Not only is that a miss, that's a bigger than average miss. So you keep all that in mind. Number one, it's a big number. Number two, it's a big miss. Number three, the market's a little concerned about it. So they stepped on it, and they stayed at or below ground zero, as we talk about with big numbers or events. This is ground zero. This is where the market was before the damn number came out. Draw a line across. No coincidence it holds on the first pullback and stays weak for the remainder of the session. That's the kind of reaction that you can get from that number. Now, even before that, we come in before the open, a few minutes before the open, I noticed some activity that was rare that happened, and I actually seen it. Let me shrink this in these dials here along the perimeter of my screen share. This left-hand dial are all the equity markets, the Dow, the Russell, the NASDAQ, and the ES from top to bottom. They all kicked to the left and all went down together at the same time. These three all went up together. So these three are the ancillaries: bonds, yen, gold. When they go up, stocks generally go down in an asset allocation environment. They all got active all at the same time. Downside in equities, upside in these asset allocation ancillary markets, which got me to tell the room, pretty bearish, be careful. Plus, we were well off the overnight highs by about 13 handles in the ES. Plus, we had negative news from China talking about them not being happy with some of the Hong Kong pro-democracy stuff that Congress passed and President Trump signed last week. You know, then you still got a phase one deal that's unsigned. And then you've got a Fed. One thing I didn't mention with ISM that I want to make sure you guys listen to and understand, ISM, again, second biggest number of the month, came in weak this morning, but it doesn't have the backstop of the Fed this time around. A lot of times when we get negative numbers that are pretty bearish for stocks, they rally because they got the Fed that's going to cut rates in light of bad economic news. This time around, though, the Fed's pretty much in pause mode. Going into an election year, presidential election cycle here in the U.S., they don't like to do anything. They cut rates a couple times the last few months or a few meetings. They don't want to do anything going forward. That's been their signals. So think about when you get bearish economic data, it's going to stay bearish typically in markets. They don't have right now the Fed coming to the rescue. That could change, get real bad numbers, and the Fed could start signaling that they will cut. But right now, they're not going to cut in a couple of weeks at their next meeting, and they're not really looking to cut in 2020 unless we get some negative stuff. So you don't get that bad news is good news with economic numbers and that conundrum type of reaction or effect. So keep your eyes on all that and understand data. This Friday, we get the unemployment report, which is obviously the biggest number of the month. ISM came out today, weaker than expected. And you see what the market has done. It's gotten weak and pretty much stayed weak. There's been some rallies, but nothing significant enough to disallow the bears to take back over. Understand patterns, transitional moments, head fakes, and what the heck news is in the market.